connect out there. Okay, so welcome back and thank you for contributing and participating today. So what I want to do is really do a capstone of all the sessions so far and bring it across to you as a connected story, yeah, or a connected theme. So I'm just going to show the journey. So don't think that you're going over the snake. It's just a series of things that we've discussed, and I'm just going to use a bit of visuals to do that. All the stuff that we've discussed is available in slides, which is on the Lions Den Challenge website. And you also do have the videos. If you want a voiceover or what's happened, everything is available out here. But let's make a start. So a real business is about real products, yeah, and real paying customers. We know that. But you guys are not there yet. We are at the ideation stage. So this is where Lions Den comes in. So when you participate and you pitch in Lions Den, you have judges out there who are investors, who run businesses, who've been customers, and they provide you feedback and you get the learning. So it's a brilliant opportunity, and entrepreneurship is something that I've experienced and I'm experiencing it again. It's all about learning and moving on. So that's the Lions Den. Whenever you see this question mark out there, this is a counterintuitive fact. Now, a lot of things about entrepreneurship are intuitive. You find a pain that you feel and you feel other people may be feeling the same pain. Therefore, it's a good idea to pursue. It's a good thing. It's intuitive, right? But there are a few things about entrepreneurship which are counterintuitive, and I want you to just reflect on them today about startups, so that as and when you go through this journey, now, tomorrow, day after, whenever it is, it's something you bear at the top of your mind. The first counterintuitive thing about entrepreneurship is that actually it's about being benevolent. Now, you think of startups as making a whole lots of money. What's it got to do with benevolence? Benevolence, right, of being good. Actually, there's no difference, because when you solve a customer need or a pain point, and you're doing good in that regard, right, as you've got your venture out there, right, when you have an idea that is benevolent, you find that people are more likely to help you, investors are more likely to support you, people are more likely to introduce you to networks. And if it's a software app or developers, you're likely to get the best developers because they believe in your cause, which is why your passion and purpose in what you're doing becomes very important. You can always find ways to make money, right? You can always find, there are a lot of business models you already tried, there are a lot of business models, there are many ways to make money, even if the end user is not going to pay you out there, right? But remember, at the heart of great entrepreneurship is benevolence out there. Google started like that. It's about, was bringing information to the world, and they kept that motto going as far as possible, which is don't be evil. Okay, the next thing that we learned is that there are 4 ingredients to entrepreneurship, and it's idea, product, yeah, team, and execution. And they all happen together. Yeah, they all happen together. And for a successful venture that's going to grow and scale and be big in the future, or be successful or sustainable in the future, you need to have all of these. You also need a little bit of luck. We discussed this in session 1 and session 2. So these are the 3 ingredients. Okay? The idea, however, has to be a validated one. So before you make the product, you need to go through a process of validating and saying, is there a market for it? What is the competition? Is this the right industry? Can I position myself? Can I access my customers, etc.? And we'll talk about what those steps are. Questions came up from here about ideas. There are typically 3 ways ideas come. Ideas come because you have a passion about something, which may be mathematics, which may be being national about a company, which may be preservation. It may be technology because you're working at leading edge, because you're a medical doctor or you're a scientist, or you just find a need, right? You find a personal pain point and you say, I'm sure other people may have the same. So these are where great ideas come. Don't try and borrow other people's ideas, because for a very simple reason, you're going to do a startup. Whenever you go into the future with a startup, right, it's something that you're going to live with for a long, long time. And unless you feel something about it personally, you're not going to stay with it. So ideas are not borrowed. Ideas are something that you own personally, and it's something that you're very passionate about seeing through, which is about UK PLC in mathematics. So that is one thing. And the other thing is that wherever they generate from, because you're a nanoscientist or because you believe in something, no matter where they come from, you have to make sure that this are providing some customer benefit. Okay? So that's the thing about the idea. So there may be 3 ways to start a venture. That's how. The second counterintuitive point is, rather than building a product that everybody kind of marginally likes, build something that a few people will love. So this is the other counterintuitive thing. Build something a few people will love, because they become, as the comment came here, evangelists for talking about your product to other people, etc. And then when you work with customers and customer segments, you will find ways to address other customer segments. A lot of people make the mistake of doing a very generalized product for everybody, which doesn't solve a big problem, and that's where you miss a point. Okay? We discussed what the simple pitch was, and the simple pitch was based on a very simple business model, which we also discussed. For whom are you providing, what services or what problem are you solving, how are you going to do it? Again, this was something we did in sessions 2 and 3. Good. There's a stage. You're in the market. So entrepreneur or startups have evolutions, right? So you have an evolution. You're at a stage right now where it's an idea. At some point, it's a product. Then you have customers. You have proof of customer, proof of market. And at that point, you take a decision. Do I go into making profits, or do I go for growth? And that's typical choices people make. So really, high-tech ventures want to say, like, let's go for growth and market share. We'll sort out profits later, and depending on how well you're funded. But the other ones, you want to start doing profit. So depending on which stage of the venture you're in, you're focusing on very different things, and your financials will look quite different. Okay? So when you're in an idea stage, there's no product, but then you get into prototyping, product, market, etc. Okay? So that's another thing we discussed. And the last thing we discussed was industry, what industry you're in, and we discussed 5 forces model, just to see how you're competitive in a particular industry. It doesn't take you more than 15 minutes to do an analysis as to who are my suppliers, can they pressurize me, what are my substitutes, what's the cost of new entrants, and I know some of you are studying entrepreneurship here out there. A very simple analysis. It's really important to know, because WhatsApp came and completely took the wind out of the mobile companies who were making a lot of money out of SMSs. So sometimes substitute products from different industries can come and do that. And I think some important points were raised here about why somebody asking, why can't you just Google for that information, right? So you also got to think, can Google come at some point and take? Doesn't matter. So that's the journey so far. Then we discussed something about markets. Now, 3 things about markets I just want to highlight. Firstly, at the big picture, you want to be in an area where the market is reasonably well sized, it's growing, and there's enough room for competition. You don't want to be in the smallest of markets out there, or you don't want to be in a declining market. An example we used in the past is you don't want to set up a bookstore when we know most books are going online because it's a declining market. Second aspect on markets is, can you access those customers? Can you find customers whose needs you're going to solve? Will they pay for it? Will they prefer your solution versus existing tuitions? Can you differentiate your product? Yeah? And can they find you? Right? That is the micro aspect of the market that we want to understand. A big mistake people make is they say the market is worth 5 billion, therefore I should get 0.001% of it. That is algebra, right? So how you're going to approach the market is very different from what the size of the market. The size of the market basically is an upper bound of what's possible, but doesn't give you the right? And it's called the China syndrome. The next thing is innovation. And what we discussed in, sorry about that, innovation. Most of us think that innovation comes in technology. Actually, no. There is a lot more returns on an investment or innovation that's happened in process. And a lot of the big innovations that have happened today, like Google, with AdWords, like Zipcar, are actually business model innovations. So which is why I love the fact that you guys have looked at various business models to make this thing workable, right? In terms of who's going to pay, who's going to be passionate about it. And again, there are slides out there, so you can see that there are many, many ways to innovate in terms of business models. So business model innovation is a very cool way of pushing your entrepreneurial venture. There's also something about waves. So when you're starting a venture, and Adam from Freelancer talked to us about it, he says, what are the waves that we can ride? And he said something very interesting. On the one hand, software is coming in a big, big way and is eating the world, right? A lot of things are becoming software oriented. The second thing is that internet is penetrating the 4 billion people who don't have access, and they are growing at a huge rate out there. And the third thing he said is education was becoming freely available. Someone in Bangladesh or Africa can access a course from MIT or on Udemy and do it for free out there, which removes the disparity on skill. So when you look at your entrepreneurial venture, also look at what trends can favor you, the big things that are happening that'll push your boat. Yeah, that's another thing. And again, it's something that people will ask and look at. So, you know, what are the ways you can write? We also learned that it's a good idea to bootstrap. And the concept of bootstrapping is to be frugal, is to start small, is to build things bit by bit. It sounds like a horrible thing, but actually it's a really good thing, because when you bootstrap, right, you run small experiments, you don't go and blow all of your money up in front, you work with customers to try and find out what products are going to work. And that's how you try and test and do innovate. And that's a good way to do product innovation. How do you differentiate? Well, first you got to find out who your competitors are, and one way of differentiating is to use something that we said, let's use value curves, so that we can talk about ourselves as different from the customer. But your biggest competition is not the competitor out there. Your biggest competition is converting your non-customer into your customer, because human beings need to be convinced to buy your product. We then went on to market segmentation, and that's another counterintuitive thing. We all feel that it's good to attack a lot of segments at the same time, and the counterintuitive fact is no. Decide on one segment that you have access to, focus on it till you're proven or disproven that you can sell into that segment, and once you've sold into it, move on to the next one. If you haven't sold into it, then there's a technique called pivoting, your minimum viable product, then you get on to that. Yeah? So focus in the market is one of the biggest things entrepreneurs need to do, because all startups don't starve, they drown, because there are so many ideas, possibilities, connections, contacts, etc. You want to say, I'm going to go for that market, that's my consumer segment, and I'm going to see if I'm going to work, and if it's not going to work, then I'll move on to the next one, because you don't have resources to attack multiple fronts at the same time. So all the stuff was about ideas. Then we had the last couple of sessions, which was on product and finance. We went on to product, and he said we can develop minimum viable products, which is basically you design something, you build, you measure, you learn. And that's when we discovered that some of the biggest companies today actually didn't even develop a product, because what they wanted to establish was, could they change consumer behavior to buy their product before they actually went and built it. So the thinking today is not, should I build the product, because anybody can get t-shirts and imprint the signs, right? Is that if I build this product, will customers buy it? So that's what you need to do. And you have examples of Zappos, $1 billion company that put photographs of shoes on its websites, even they don't make them, just to establish whether people are going to buy them. You had Dropbox, who didn't have a product out there. They just put a video out there to see if people were going to sign up for their services. You had Indian Village Laundry Services, who had a non-functional washing machine at the back of a truck just to test whether people were willing to give clothes out there. So the thing about minimum viable products is not to just build the smallest product, but is to test first whether people are going to come and buy it, and then build the product. What happens when you get stuck? That's when you pivot. And we discussed this again. It's all in your slides. Pivot is When you want to move to different markets, you decide my product is not working in this market, maybe I have to work at a wider feature set, or there's one feature that they absolutely love, maybe I work on that, or I move into a different market. So again, slides are available for you guys, and that is another concept we discussed. And the last bit then we went on was cash, and we said it should be conserved at all costs, because cash is the lifeblood of business. And how we can do it? Well, one thing is that we be frugal. There's a whole new thinking coming about frugal innovation, frugal engineering. There are a lot of research coming out because frugal innovation is what's happening in 2/3 of the world today. And what do we do about cash? Well, conserve it at all costs. Not only be frugal, get paid by customers as early as possible, try and delay supplier payments, keep your working capital as healthy as you can. Always have good margins, because good margins will ensure that you will be successful and healthy in the long run. And should your business grow too fast, as Michael said in the last session, you've got other opportunities of making sure you can do bill discounting, etc., to keep up with the pace of the business. Rejection, when you go and talk to customers and say, should I build this product? Rejection by itself is not a failure. Not knowing you're going to be rejected after you've invested a whole lot of money would be a failure. So rejection is actually a learning, because you have an idea that this product is going to the market. When you go and talk to customers and you find actually the need is not there, it's good because you did it early, quickly, got out, pivoted, did something else, right? Okay. And last we finished off with the Lion's Den business plan. It was all about product, idea, team, execution, with a couple of other things thrown in, financials, risks, and how you're going to mitigate them, right? So that's about the Lion's Den competition. All I wanted to add at the end of this is all that you've been listening here is the kind of stuff that's happening at MIT, Stanford, Harvard, London Business School, because all that information is now available. So you guys are really, really fortunate, because that's the kind of stuff that's actually available to you out here. A personal story is, whilst I've been doing this particular session with you guys for the last 4 months, I've had my own entrepreneurial venture, and I'm actually applying it, and it's quite an insightful and an exciting kind of journey. So whether it's Lion's Den you guys are going for, or your big Starship enterprise in the future, just want to wish you good luck, and I always have time for you guys. 20 minutes, anytime you want to come and discuss your venture, post the competition, whatever, very happy to do so. Thank you very much.